This is the MTPredictor Weekly Market Update for October 14th. We've got the daily S&P here, the S&P E-mini, the December contract. Again, we'll go over probably just a quick update tonight because everything is kind of falling into line as we anticipated here. But we'll look, as you see, the Wave 5 top here in the ES before we begin to get a correction. We talked about this area in here is where the Dow was able to make a new high and take out that prior, at least trade above that prior Wave 5 high, and the S&P failed. And the last time we saw that not too long ago, this ended up being, of course, Wave 2. If I put the Elliott wave analysis on here, you see the Wave 2 area. We'll look at this as potentially Wave 2 and not Wave B because of the significant high here. So this becomes Wave 1 or potential Wave 2, and we can project Wave 3 down as I've been doing the last couple weeks here anyway. So just around 1400, you can see the typical Wave 3 target there in the ES. I drew these little short-term trend lines here. You see the first one obviously was taken out, and we're kind of sitting around the second one here. If I put a decision point there, there's going to be more support here just above the Wave 3, initial Wave 3 target there anyway. If we look at the, just going to pull the NQ in here. NQ already, if we look at the pattern up here, there was your Wave 5. So potential Wave 1 into Wave 2 here. In fact, if I put the little minor wave, you see the little minor ABC pattern. This is what we call our holy grail. So we're looking at this as potential Wave 1 into Wave 2 and project Wave 3 down here, starting with the major swing high there. And you see the Wave 3 target and the NQ right around 2677 area there. So we'll see how that finishes out. Now, if I put the 5-wave pattern here on the NQ, right? Typically, the correction comes back to the Wave 4, at least back to this Wave 4 decision point. We've done that, so we'll have to see if this area holds as support. Then the trend, which was up prior, should continue up. All right. So the S&P may have a little further to go. I'll go back there. Into this Wave 3, and that will probably, control the other markets to some extent. If the S&P holds support here, and if there's trendline decision point support there, again, we'll have to watch that. It doesn't have too far to fall below that, so we'll see if it seeks that. But anyway, we are getting in an area where if we get into these support areas in the S&P, we could be due for a bounce. Looks like they tried to bounce early on Friday, and then things kind of fell apart there. It's hard to give a lot of weight on a Friday as you head into a weekend. So we'll see what happens this week. You've got earnings. Earnings started last week, and then it will be in full swing this week. And so we'll see what kind of movement we get. But the trading intraday has been very good, and so hopefully that will continue as we go through earnings season here. And QE 3 hitting the market. So a lot of stuff that's going to be getting the market to work and kind of opening up the ranges, it looks like. So, and let's take a look at gold here. This is the weekly chart. You can see the last buy signal there with the trend being in the up direction. And so that has come into this kind of Wave C target here, your minimum Wave C target, and gold has begun to pull back a bit. The next level resistance above that is this decision point off the last swing, basically into this low. Let's look at the daily here. The interesting thing about gold now, again, here was our kind of 14-week consolidation with the breakout. Got your golden cross there, the 50 period crossing the 200 period. And if I put the Elliott waves on here, you see this is It's not a real significant 5-wave pattern, but you can see software does find the pattern there. Typically, again, the correction would be back to this wave 4 DP, which would put gold down around 1731 area. The actual wave 5 target was up here. We haven't achieved that yet. Here's the last major swing high up here, and again, we haven't come into that. This was around 1835 area, major resistance there. So not sure which way this is kind of going to go yet. Interesting thing now with gold, as of January 2013, the banks have now ruled that gold will become a tier 1 asset, basically meaning is as good as cash. So as a broker at Schwab, one of the things, if somebody wanted to purchase, let's say $50,000 of a particular stock in their account, they had 3 business days to deliver the funds, or they could deliver treasuries that were T1 assets, is considered as good as cash. Well, now gold will also be in that category. So it's going basically from a tier 3 to a tier 1 status, and like I said, as good as cash. So that'll be interesting. Certainly won't hurt the price of gold. Some of that may be priced in already. There's already some brokerages that are accepting gold as cash kind of ahead of time, a little early. But just another interesting development as world central banks continue to be net buyers of gold. So even though the Fed doesn't believe gold is money, certainly a lot of the central banks still consider, I think, gold to be money, and or at least hedge against what they know is coming, and probably a little distrust of each other's currency. So anyway, we'll see how this gets resolved here. Again, a nice pullback would not be, maybe back to the 50 period or into this area would kind of be welcome, I think, for those that are looking to accumulate over a long term for these things. Silver, again, very similar situation here. It has come into its decision point resistance off its last swing back here. You can see that highlighted here. This was kind of again, not a nice, clean pattern. The starting point here is in that consolidation and the break. The wave 5 target was actually up higher here, but the decision point kind of muted the rally, kind of going sideways here. The wave 4 DP here, which is the tendency where the market likes to correct, at a minimum back to this area, sitting around 33. I'm going to call it 33.10, right around that $33 area in silver. So we'll see if it finds support there. Worst case, maybe it finds the 50 period around that $32 area, and then we'll see if they continue. Again, you got your 50 period crossing above the 200 period on this market as well. And let's take a peek at oil. So you saw we had the sell in oil that achieved the target a while back, and we've kind of just come back into that target area there. I think we closed around 91.86 or so on Friday. If we look at again on the weekly chart, we've been in this kind of long-term pattern going back to July of 2011, where it's finding support around $80 and resistance around that 110. You can see once it kind of gets in that 110 area, that things tend to sell off. Here it began to move above 110 and then really got slammed back there, and then these are all right around that $110 area peaks with your $80 support area, as you can see here. So it's kind of in that channel, and so we can draw lines, and then we'll see which way this thing breaks. Again, this is the bigger time frame, but we'll have to see. Like we talked about, I think we talked about this either in the trading room or in the weekly market update, of the credit portion of the base money is contracting, and that's deflationary. and that's why the Fed, and it's contracting to the tune of about $50 billion a month. That's again the credit as people take out loans and things, that creates money. As people pay off loans, pay off debts, those things contract, that credit portion of the money supply, and that's contracting now, and we haven't seen this kind of contraction since the Great Depression, and that's why the Fed is really fighting this with to the tune of what, 40 billion QE3 to kind of offset that contraction. The Fed has said that he's comfortable with a little inflation because the this Fed is a student of, so-called anyway, student of the Great Depression, and that was a deflationary depression, so he's going to fight that, and doesn't mind a little bit of inflation. So we'll see how that battle goes. But anyway, that so don't know which way this thing will end up breaking. Depending on what kind of situation we get. If the Fed is successful and we get more of an inflationary environment, or if deflation sets in and maybe we get deflation first and then inflation later, we could get a combination of inflation in food and energy and deflation in things like your high-tech stuff, TVs, stuff that has become cheaper. Could get a combination. Anyway, it should be interesting there. Take a look at the Euro US dollar. This is again the weekly chart, and you see the pattern was our nice 5-wave pattern down here. Here's your correction that typically unfolds back to this wave 4 DP, and that would put the euro around 3660, 70 area. But on the daily, again, that same 5-wave pattern down right into your typical wave 5 target there. It's already achieved the correction back to its wave 4 DP here, and then it's just kind of sitting out, so it hasn't quite taken out that range yet. If they are able to, this is the top of wave 1 for this pattern. If I take a decision point there, your next resistance will come in around 34.30. So if they take this area out to the upside, then we should see this area, and that then would cause the dollar, which is was weak, but has found some support down here, almost kind of double bottoms. There's more support there. I think this one's going to be a little inside. Yeah, if I drag this over. So we had a bunch of, kind of a demand back here that continues to hold. We did get a sell signal in the dollar on the daily chart here, with the target would take you, down into this decision point area. But this is going to be well, all these areas are support. So we'll see how this plays out. But if this does, get to this target, then we should see the euro hitting its DP off of the top of wave 1 there that we looked at. So you can see this particular setup. Now this 100% initial risk line there is at 79,545, and it hasn't quite gotten that low there of 79,575. I'm sorry, 575. So if it gets to 545, those that own the software, you can move your stop to your entry there for a risk-free trade, and just see if we can chew through these support areas down to the target there. And like I said, that would push the euro higher. At least watch that, and it's obviously going to affect your euro trade if you happen to be long the euro. All right, so again, earnings season, full swing this week, and QE3 going to be hitting the market. All these things, trading's been good intraday. Hopefully that will continue. We came out of a kind of a rough cycle in the E-minis, and it's starting to head into a very, very good productive cycle. So we'll see how that continues, and we'll come back and take a look at things again next week.